This is one of the most India's respected company. A 52-week high which was trading around 3,840 rupees. And today, this particular stock, it is sitting around 2,931 rupees. That's a fall of almost 24% from the top. So what happened? Is Mahindra is broken, or this is an opportunity where the long-term investors were waiting for? I am going to do a complete breakdown like how they make money. I will be discussing about the debt, promoter integrity, financials, and I will finally give my honest review. So please do watch this video fully. You will get a complete understanding about this particular stock. So without wasting time, so quickly get into the video. Let's go. Mahindra and Mahindra Limited. It was founded in 1945. It was started as a steel trading business, and today it is one of the largest automobile and diversified conglomerates. It is a part of Nifty 50 and it is in the BSE Sensex. They have around 78,000 employees and operating across 100 countries. But here is what Mahindra and Mahindra makes special. They don't just make the cars. They own multiple businesses that are each lenders with their own rights. They are in #1 SUV manufacturer in India. In India, by the revenue market share, which is 24% as per the December 2025. They are the #1 tractor manufacturer in the world by volume through its Mahindra and Swaraj brand, with 44.1% of the market share in India for April to December 2025. They do have something called Mahindra Finance. This is one of the India's largest rural focused of NBFCs. And they do have something called Tech Mahindra. It is also listed in the stock exchange. That you all know, it is an IT service company, which is global service delivery. They do have something called Mahindra Logistics, Mahindra Lifespace, and Mahindra Holidays, which is listed as a own subsidiaries with their own rights. Of course, this is a conglomerate. If you are buying this Mahindra and Mahindra stock, you are not just buying the SUVs, you are buying an entire ecosystem. I would like to talk about like how do they make money. I have categorized this into 4 buckets. Let's see what is there in the bucket 1. Bucket 1, it has automotive, which is approximately 55% of the consolidated revenue they get. This is their biggest engine. SUVs like Scorpio N, Scorpio Classic, Thar, XUV 3XO, BE6E, XEV 9E. They also sell LCVs, pickups and small trucks, and electric 3-wheelers through Mahindra Last Mile Mobility. So let's talk about what is there in the bucket 2. Bucket 2 is all about the farm equipments. Approximately, they are getting around 20% of the revenue from that. Tractors, rice planters, rotavators. This segment is the backbone of the rural India. In financial year of 2026, Mahindra's tractor market share has touched 44.1%. So now let's see what is there in the bucket 3. Bucket 3 is a financial service. Approximately, they are getting 15% of the revenue from that. Mahindra Finance, vehicle financing, SME loans, housing financings, and all those things comes under this category. This is their NBFC arm. This is also the main reason the consolidated debt, which is huge. Yeah, definitely I will come to that. Bucket 4 is like technologies. Approximately, they are getting around 10% of the revenue. Tech Mahindra, Mahindra Logistics, Defense, Aerospace, and Hospitality. All these things which comes under the bucket 4. One thing that stands out, which is Mahindra and Mahindra business model. They have a negative cash conversion cycle of minus 21 days. That exactly means their suppliers are funding for their business operations. This is a sign of pricing power and supply chain dominance. Now, I would like to talk about the financials, which is the complete fundamentals. I will talk past, present, and the future. Let's go by year on year from the top level. I would like to start from the 10-year of revenue journey. When you look at the financial year of 14, they had around 74,000 crores. And in financial year of 20, they had 75,382 crores. This is due to COVID hit. In financial year of 2022, they had around 90,172 crores. That is a massive recovery. Financial year of 2023, which is 1,21,000 crores. That is where the SUV super cycles, it has been kicked in. In financial year of 2024, they had 1,39,000 crores. In 2025, 1,59,000 crores around. Last year, the trailing 12 months of December 2025, they have roughly around 1,86,000 crores. The revenue CAGR, over for 3 years, which is 21%. Over 5 years, which is 16%. Let's talk about the net profit. This is where M&M, they become so exceptional. When you look at the financial year of 20, which is completely negative, they have around minus 321 crores, which is due to COVID hit. In 2022, they have around 7,253 crores, which is massive recovery. In 2023, they have around something like 11,000 crores. In 24, which is 12,000 crores. In 25, they have around 14,000 crores. And to the month, they have around 16,000 crores. The 5 years of CAGR profit, which is 113%. You don't hear that from a company with 3.6 lakhs crores of market cap, which is very often. Their operating margin is also expanding. In financial year of 14, they had around something like 14%. In 20, it is dropped up to 13%. In 23, they have around like 17%. In 25, they have around like 19%. In Q3 financial year of 2026, which is roughly around 20%. Now, let's look at the last quarter. So this is an official number which has been released, a consolidated revenue which is 52,100 crores, which is up by 25.6% year on year. And the consolidated net profit attributed to the owners, they have around like 4,67,064 crores, which is up by 47%. The EPS of that particular quarter, they have around like 41 rupees 85 paisa, and which is up from 28 rupees 51 paisa in Q3 financial year of 2025. The total vehicle sales in the quarter is 3 lakhs unit, and this is also up by 23%. I feel like this is one of the strongest quarter for them. The revenue which is going up for 19 consecutive quarters. Let's talk about the cash flow. The consolidated operating cash flow has been volatile. Sometimes it is deeply negative. This is mainly due to the Mahindra financial loan book growth. That shows up the cash flow outflow at the consolidated level. Standalone automotive and the farm business that generates healthy positive cash flow. When you look at the investing cash flow of financial year of 2025, that was minus around 18,000 crores. This is due to heavy capex which is going to the EV plants, the battery capacity, SUV expansions, and all those things. The management, they have guided for 37,000 crores of capex over financial year of 2026 to 2028. This is mainly for EV transition. So how is the future looks like? The SUV order book, it remains strong. BE6E and XEV9E, they have received the positive early response. The EV segment is expected to turn positive by financial year of 2027. The tractor business recovery is already underway. The normal monsoon cycle plus the rural income growth, which is equal to the tractor upcycle. My view on this promoter integrity is, the promoter integrity is very high. The low promoter stake, which is something like the concerning one, which we have to watch it closely, but there is no the integrity concerns. When you look at the profitability, ROE is 18%, ROCE is 13.9%. The operating margin, which is something like they have 19 to 20%. This is something like an expanding trend. The dividend payout is consistent. They have around like 20%, 25 rupees per share. It has been declared in financial year of 2025. Let's talk about the debt. There is a gross borrowing on the consolidated balance sheet as of March 2025, which is around like 1,29,000 crores. That looks massive. When you look at the balance sheet, as of the March 2025, I do see there is a gross borrowing, which is around like 1,29,000 crores. That looks massive. But here is the key. Approximately 80 to 85%, which directly comes from the Mahindra Finance of loan book. And NBFC borrowing is to lend. That's the business model. I don't see this is a debt risk for the auto company. On the standalone basis, the Mahindra & Mahindra net debt, it can be manageable. When you look at the compounded growth summary, on a 10-year scale, the CAGR is 8%. On a 5-year scale, the CAGR is 16%, which is 3 years of CAGR, which is like 21%. On the time to month, the sales growth is like around like 23%. The 10-year of profit, which is 16%, and 5-year of profit, which is like 113%. This shows the business is clearly accelerating. This is not a story of the mean reversion. This is a structural outperformance driven by the SUV super cycles and the product leadership. We have to talk something on price to book sanity check. The price to book value for this particular stock, which is around like 4.40 at the book value of 666. This exactly says the stock has derated itself from its peak of the price to book value of 5.3 times. A company generating 18% of ROE, which of franchises like Mahindra & Mahindra, the price to book value of 4 to 4.5 times, which is completely fair. When you look at the dividend yield of this current price, they have declared 25 rupees per share in financial year of 2025. This particular company is like below sector PE. The business is growing fast at any point in its history. The valuation is more attractive. It has been since early 2024. Okay, what is my understanding on this particular stock? Wait, this is something like completely ignore? No, definitely not. This is a Nifty 50 quality compounder. They are the number one in SUV makers, number one in tractor globally. They have a clean governance, accelerating earnings, which is like 113%, which is a 5 years profit of CAGR. We cannot ignore this company fully. We should wait or do nothing. I feel this is also a mistake. The fundamentals are strong. The valuations are The stock is already corrected 24% from its peak. The wait for the perfect bottom will mean we will really miss the bus. Finally, we have come to the end of this video. I hope you might have liked this video. If you liked it, please do hit a like button and do subscribe. We'll see you on the another good one. Thank you so much.